Hi, everyone. This is Sean with Paycheck to Portfolio. Looking at the poll I had put out a couple days ago, you can see we had a couple items that were neck and neck here. How I invest every W-2 paycheck and never touch it. Obviously, that's what this video is going to be about. And at the time I checked, this was leading. You can see it's since been passed by margin strategy, how I borrowed to boost income. That will be the next video later on in the week. And of course, I'll touch on all of these as we move along here. But we'll just jump right in to how I invest every W-2 paycheck and never touch it. Wanted to talk about just a very high level image here that explains the core of the channel and how we're trying to get out of corporate America and live financially free. So every W-2 paycheck I get biweekly goes straight into my E-Trade brokerage account. At that point, I buy dividend and growth assets, and I float my margin bills. So whatever my dividends pay, whatever's left over, my margin covers that, and I just rinse and repeat this cycle. And what will happen is eventually this will snowball to where my dividend assets cover my monthly living expenses, and then I'm essentially financially free. We call this FIRE, or financially independent, retire early. That's the goal, and I'm happy to help all of us try to get to that point because we're all fighting the same battle with just cost of living and interest rates and groceries and all those things. As I've shared previously, we're a family of six, so everything's expensive. And if I can make my money work harder for me as opposed to just spending it and it going to zero and then having to replenish it with work, I'm making these dollars work for me. And essentially, they will pay for themselves. And that's how we can become financially free. If you look at the quote by Albert Einstein below, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. In our culture, we're so used to going and buying a $50,000 vehicle or a $75,000 vehicle that will depreciate and become worthless and think that that's normal or even acceptable. Now, I don't have anything against new vehicles, don't get me wrong, but we need to change our mindset to going and using our leverage to buy assets that pay us back. And that's the key to this channel and how I'm trying to help you break free of corporate America. Looking at the brokerage account, just to get an update here, you can see it was a pretty good day in the market with the trade deal with China. We were up $4,800 or 4.17%. Comparing that to the market, the S&P 500 was up 3.26%. The NASDAQ was up, I think, around 4. There's obviously a glitch going on here. The Dow was up 2.81. So with margin leverage, we outperform the market, and that's how we get our outperformance. If you click into the details, you'll see that the net account value is $106,720. Our unrealized gain is almost $23,000 now. And you can see the day's unrealized gain was 4,800. You'll see this percentage drop to 2.19. That's because on this specific tab, it doesn't take into account the margin leverage. If you look at the estimated income tab, we're currently sitting at 40,000 for the year projected. You can see that this will go up because May is missing part of the month there. If you look at the next 1 month, we're projected to be at $3,455. I'm going to show you here in just a minute, quick and simplify, basically my books for the month of April to show you how much dividends I brought in for April and what the margin interest cost me. So I'll show you that here shortly. Let's see. Let's go look at performance quickly, just so you can transparently see how the account's doing. Looking at the 3-year performance, and again, this will go up with today's market performance as it refreshes overnight here. We're currently up on the 3-year chart, 53, basically 54% compared to the S&P 500 at 37%, the NASDAQ at 47, the Dow at 25, and the Russell at 10. I won't go over each percentage of the indexes on each tab, but I just want you to have a chance to see it. On the 1 year, you can see we're up 30% compared to the S&P 500, NASDAQ, Dow, and Russell. And on the year to date, you can see we're actually favorable 6%, and all the indexes are down with the difficult start to the year with tariff talks and other things. So there's the transparent update as it relates to the account. Looking at the inflows and outflows of my account, I'm going to start from the top here. So again, I run my inflows and outflows out of the brokerage just like an accountant. If you need help with that, I'm happy to help you, and I'll tell you about some of the options I'm currently offering towards the end of the video. But you can see I'm going to talk about dividends is what I'm going to focus on. Of course, I'll sell call options on covered calls actually right here. In the month of April, we had a lot of volatility, so I was buying and selling just call options and put options, and was able to generate cash flow there as well. But I'm selling covered calls. If you need more information on that, that was in my last video. You can go on the channel and look that up. As far as dividends in the month of April, you can see all the inflows here of dividends, just showing it to you transparently, just so you can see how I tag everything and what's coming in. Some of these pay weekly, some of these pay monthly. For the month of April, you can see that came into $3,086 into the inflow bucket. Down here, I have a margin tab that I track, and you can see I'm tracking everything, so it's a ways down here. This tracks basically the inflow and outflow, whether I'm paying the margin down or whether I'm borrowing from margin. But essentially, you can see I tagged and highlighted the margin interest that I paid for the month of April. So I paid $724, and I brought in $3,000 and paid $724, and you can see the net that I essentially brought in. So I arbitraged my own income, and I was able to make the money work harder for me. And essentially, again, this will snowball and surpass all the other expenses. So if you look at my full balance sheet here, you have the income, which includes all the brokerage activities. You have my paycheck that's rolling in. You have put options that I had sold for the month of April to ensure the account that went up quite a bit. You have some expenses, both of my business. I have an LLC, which I use to write off taxes. And I obviously have business functions within that. Some real estate things I do as far as wholesaling, flipping, and other items like that. I'll talk about that in the future. Of course, my investment accounts and my dividends as well, and teaching and other things. If you look at all the inflows and outflows, I'm just trying to move slow here so you can see, my mortgage and everything's here, just being completely transparent. If you scroll all the way down to the bottom, for the month of April, I had a total income of $153,379. A lot of that was just movement of money, buying put options, selling put options, buying call options, selling call options. A lot of this was just money movement. It wasn't stacked cash sitting in the account. It was the inflow and the outflow of it. I spent $151,684, and you can see I had a total net income left over after all those inflows, all those expenses of $1,695. So again, the system works. It's very simple, but it's complex to manage from an accounting perspective. And again, I'm happy to help you and happy to set this up. Trying to think about a few other things here I can show. I'm now offering a couple options, which you can see I have posted here. I'm trying to get to it. So if you go to the channel page, obviously the new video is dropping tomorrow. I think I put Tuesday, May 14th. That's obviously Wednesday. The video is going to drop on the 13th, so I'll correct that here in just a second. You can grab these resources for free, and that's posted here as well in the Discord. But if you just click this, it's going to take you to the link to go ahead and get the blueprint and the calculator for free. Essentially what this calculator does, this is the complicated version. I'm trying to look for the easier version so you can understand. Let's just grab it real quick so I can show you. If you go and grab this calculator, I just want to show it to you if I can get it to launch here. Here it goes. All right, I made a simple calculator. You can just punch in your starting balance here. Let's say it's $5,000. I was helping my nephew with this earlier. He makes about $60,000 a year. So let's say he puts $60,000 a year into this. We're assuming a conservative growth rate of 7%, a conservative dividend yield blend of 20%. This is his projected portfolio value if he's just taking the dividends as cash and paying bills with it. If he reinvested these dividends, it would obviously compound quicker. That would equate to $13,000 of dividends, and again, a 7% growth rate for his actual assets. What you would do is you would take this amount and you would just plug it right in right over here. 65,350. Let's see here, 65,350. Hit enter. It'll update the charts. You update this with the annual salary, and it'll update. and I just added 2% to the dividend because you're buying more dividend assets as your W-2 inflows. And then, of course, this just keeps compounding. And you can see I'm just trying to give you a real life example of something I was helping my nephew with earlier in the day on his own stuff. And again, I'm just going through here so you can see it. And I know that this is, I'm typing away, but I want you to see just the raw nature of what we're talking about and how your money can compound if it's used to buy assets versus being spent to nothing. And there you go. If he started out with 5,000 fully invested as W-2 income, growth rate at 7%, you can see just the growth rate compounds his account. And then you have the dividend inflow over here. Now, what you would have to do is deduct your margin interest. So let's say, just for the sake of conversation and illustration, let's say he was paying a 9% margin rate, right? And so he was borrowing, let's just say he was borrowing $60,000, even though some of these dividends would cover a big chunk of his expenses. So if you take 60,000 and you multiply it times 0.09 or 9%, that would be $5,400 in a worst case scenario. So essentially, this would be the dividends earned minus the margin interest rate, and your net gain from there would be, let's just do the math real quick. On a calculator here would be basically 76.70. So if you would have just spent that money, it would have gone to zero. But instead, it's being compounded. One, it's buying assets that grow. Two, you're arbitraging your own income and you're stacking your funds. So I hope this video was helpful. Please reach out to me. Happy to help. We'll continue to make additional videos. I appreciate all the support. We'll talk to everybody soon.